That's why it's so difficult for people. That's why everybody's getting utterly destroyed, because before you could buy TLT, but you couldn't in this inflationary environment.
Yeah.
So it's hard, and people have taken the biggest portfolio losses for a very long time because nothing has worked. I mean, every hedge fund I know, some of the macro guys have got like the rates move and knocked it out of the park. Majority, the long short guys, all of these guys have been murdered. I mean, everybody's been murdered. My view is that in a massively indebted world, to put this in perspective, the US is some 300 and something percent of GDP in debt, as total debts to GDP. It is 100% of world GDP in debt. It's the most indebted any nation has ever been. And everybody borrows dollars. And we're in a system where they're trying to act like Paul Volcker, because basically the Fed is run by a bunch of baby boomers and they want to get a book out where they're on the front cover like Paul Volcker to be the heroes. But I think what they're doing is fighting the ghosts of the past. The ghost of the past, the 1970s, was wildly different. We've talked about this in Daily Briefing before. The demographic setup is different. Also, the debt is different. I mean, the US is like 100% of GDP in debt, total debts at that point. We're now at least another 150%, maybe 200% of GDP in debt on top. So with an aging demographic and high debt, it's very difficult to generate inflation. But the Fed are now convinced they need to be Paul Volcker, and they are going to go and raise rates further than the market can deal with. And we're seeing it. We're seeing it everywhere, that the market's going, we cannot deal with rates like this and the liquidity that's happened. Then the UK starts cutting taxes whilst raising rates. And what happens is the currency collapsed. And today, the pound was down 3.5%. This is in the top 5 largest currencies in the world, and it's down and more volatile than the Nasdaq. This is extraordinary, but it's not just that. The Eurozone has got the same problems. South Korea, it's a mess. What we've got is a shortage of dollars, something I've talked a lot about and many guests have talked about. There is a global shortage of dollars. The Fed are taking dollars out of the system, and what's happening is the safety valve is the US dollar is skyrocketing. Now, what that also does is export massive amounts of deflation. If you look at the nations who are suffering the most, it's the world's biggest finished goods exporters: China, Japan, Germany, South Korea, Taiwan. They're all seeing massive currency declines. So this is finished goods. This is TVs and computers and chips and all of that stuff. So the US kind of likes it. My working hypothesis, and oil broke today as well, which is something I've also been on here and talked about. My working hypothesis was, I'm not sure the equity markets are going to make significant new lows, and I'm still not. They may break the low, go a bit lower, and then break back higher again, because the sentiment in equities is unparalleled. I'm about to write this in Global Macro Investor. It is the worst sentiment in any measure of any survey in the history of equity markets. So people are record bearish. They're terrified because of what's going on. The bond market, which is the anchor pricing for everything, is unhinged. And the dollar, which is the big daddy of all macro assets, has become untethered as well. So it is a scary situation. When the politicians decide that economic growth has gone too far, they will change the game. And I believe that. And that's where quantitative easing, direct handouts and other stuff to alleviate the pain that's going on. They can't have mortgage rates like this for very long before unemployment starts coming and this becomes a big problem for the Biden administration or whichever administration in whichever country you got to deal with. I think the Fed have created this by fighting the wrong battle, because the battle they remember was the battle that their heroic hero Paul Volcker fought. It ain't that battle. They're fighting the wrong thing. And so we've got a big problem on our hands. But over the next few weeks, as this pushes to its logical conclusion, you can hear in the background the people coming to the rescue, because somebody's going to have to do something about this. It may start with changing the reserve requirements of banks. It may be swap lines for the foreign central banks. It'll start somewhere, and it will grow, but this can't continue for long. Path of most pain is what they will focus on, because that's what gets votes. So human psychology is anger, resentment, fear tend to get you votes better. So what they will do is, if unemployment starts rising, which I think it will, they will start pivoting to inflation is dead, the new enemy is growth. Jobs for America. We need to help you with your bills, not what is. What is the Fed have got break-even rates of inflation down to the twos, and if this continues for the next few weeks in the vein that it is, and if oil continues to trade towards $60, which I've been saying it's going, these break-even rates are going to come down to 1%. So the battle is won. Now, I actually think, and I've said this before on the show, I think actually inflation is negative in 18 months' time. I think they completely misread the bullwhip. And the bullwhip was post-pandemic, spikes the inflation because everyone comes in the workforce, no supply, overreact to the supply. Yes, they should have raised rates, but not like this. They've misread it. They want to be Volcker. And before they know it, they've destroyed the economy and inflation as well. And they've got their old friend back, deflation. I think we're going to mean revert. And I think we're going to mean revert massively and really fast. Now, again, I've been wrong on bonds for a while now. So you can discount me to zero if you want, and that's fine. I'll take it on the chin. I honestly think that this is a mean reverting, massive decoupling followed by a recoupling that's going to happen at a very fast speed as soon as one of these liquidity mechanisms changes, whichever one it is. Look, the problems are everywhere. I mean, they're literally everywhere. And the Fed's going, la, 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 I can't hear you. I don't think it's really realized because they're still based on the narrative of we need to fight inflation until they realize they've broken the system. It's like the government's fought the narrative of we need to save the people in 2020. And before they know it, they realize they've broken the system because everything became illiquid and the Fed had to sort it out. There's somewhere within this, something very similar going on here. And it's not Raoul just wants to see them come back with quantitative easing. I'm like, I think people don't understand the structure of markets with this much debt and the issues you've got. The Fed have never really acknowledged the debts, which is the big thing that they've caused. They've never acknowledged them. It's the elephant in the room. They might continue to increase over the next few weeks in this liquidity thing. I'm still long bonds and taking some losses on the chin, significant, because it's really moved. But I honestly I still am very strongly of the belief that this is a decoupling based on liquidity situations. And eventually when those things reverse, they're very attractive propositions. So I still like bonds. I understand people don't like taking pain on that stuff, but I am going to look to double up on my positions at some point. I'm just waiting because when you get to these breakage points, things always go further than you expect. So where can 10-year bond yields go? I mean, they got to 3.7% yesterday. Can they get to 4.25%? Possibly. But, these are crazy opportunities. I think that it is unsustainable to have 85% of world trade, 87% of world trade in US dollars when 25% of world GDP is US dollars. Right? That's the outsized influence it has of having the world's reserve currency. I think China, Russia, Europe, India, South Africa, Brazil, all these commodity exporters, a whole bunch of these people, why do they want a US dollar? They have to, because all commodities are priced in dollars. But if you're a South African exporter exporting to China, why do you need this middleman currency? It's creating a problem for people because their funding rates are going up, their economies go up and down. What happens in the US? Not on their own terms. So it only accelerates it. And I've always said the dollar dies of its death. Is we are setting up for lots of opportunity. And for me, it's like, I know it's a kind of worn out expression, but you should be thinking about a shopping list. If you believe in a future of technology, you should be looking at what you can buy and when. Maybe you're a commodity person. Well, they're being thrown out with the bathwater as well. Maybe you believe in the copper shortage story. Well, you should be getting a shopping list out. There are opportunities that are going to come out of this. If there is any form of settling down of what is going on. It doesn't even have to be stimulus. It just can be things settle down, the Fed slow down, everything's returned to normality, there's money to be made. So you need to keep a calm head. You need to see what these headwinds are. You need to see the storms when they're coming and prepare for them. So it's been really hard for the average person to know what the hell to do. You know, the answer would have been buy dollars and go to the beach. But people look at me and go, well, how the hell do I buy dollars? What do I do?
Yeah.
That's why it's so difficult for people. That's why everybody's getting utterly destroyed. Because before you could buy TLT, but you couldn't in this inflationary environment.
Yeah.
So it's hard. And people have taken the biggest portfolio losses for a very long time because nothing has worked. I mean, every hedge fund I know, some of the macro guys have got like the rates move and knocks it out of the park. Majority, the long short guys, all of these guys have been murdered. I mean, everybody's been murdered. I haven't changed. So I'm bonds. I've got 10s, 2s, 5s. I've got everything and euro dollars. And I am long crypto. So I've luckily added significantly pretty much at the low. So lower than here in ETH and Solana around here, and some other bits and pieces. And I own some technology stocks, which I bought down 75%. A whole basket, bunch of different ETFs, doing the whole exponential age from gaming to metaverse to AI to robotics to genetic sciences to EV, all of these mega big picture themes. So I just bought a very broad basket there, which is a long-term bet, which again, if it sells off any further, and it hasn't made new lows for a long time now,